terms of trade narratives, but there's no point because that's not the case. It's simply good value trading, simply good value trading. So when we understand the concept of value trading, let's take a look at how this story evolved in terms of how we got our trades done and dusted. I'll grab a screenshot and I'll bring it across in 2 seconds. I've taken all the values off the screen so that we can see behind what's going on here. So we've got the trade log on the left-hand side and we've got the trades themselves on the right-hand side in terms of outcomes. And when we're looking at the oil today, you obviously be able to recognize that there was a very, very nice buying opportunity in terms of dollar narratives into these low prices here. There was a decent sell opportunity into that top line up here. Okay. And when we look at that, we can also look at other things. We can then say, well, what did the trade log suggest? Well, one of the things you can look at is this trade log here. The 940 trade log, right? You'll be able to see that there was a lot of aggregate supply coming into oil all the way through 9 o'clock. You can see it was all supply, 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 supply. Now into a weak dollar market, then of course that supply is something that I want to use to buy into. That makes a lot of sense. So in terms of aggregate supply, that's not based on the calendar spread. That's based on volume, on the candles themselves, right? So what happens next? Well, at 940, which obviously is on this candle here, this is a 5-minute chart. So this is the candle that happens at 940 here, this red candle. You'll be able to see that at 940, you'll be able to see this little comment here. Oil, bid watch, possible into aggregate supply. The very next candle, of course, gave us the aggregate supply. We can see that 940, 945 starts to give us that aggregate supply. This is 930, 935, 940, 945, 950. So this is the phase. This is the trade phase there. And you can see for yourself that we had this bid watch possible. It was into a level 2, which is why we got the aggregate supply as well. It's a very obvious, valid point. But that's where we get that supply. That's where we get the volume, by running those liquidities at the bottom edge. We find that liquidity pool to run into, to take trades on. Now, what happened next, of course, was that we then saw at the very top edge, you'll see this trade storyline changing. You might be able to recognize it for yourself, but there it is there. Oil. Offer watch, possible into aggregate demand, followed by aggregate demand. In other words, followed by the liquidity that we're needing. Where did the liquidity come from? The liquidity came from the $76 wholesale price. So obviously we're then able to tie that trade into that 76 wholesale, knowing that that's where the demand is going to show. So whilst it's not a level 2 that we got at the bottom edge, we know that it's going to be a big volume price because it is a wholesale price level. It's also way past a measured move, so there's always going to be some profit taking. So in other words, our indicator, our value, our trade log, got the bottom edge buy trade before the news came out from Reuters, and got the top edge sell trade before the news, which were retracted by Reuters. Before both of those news events took place, we already had the trade on the books in terms of the timing on the trade log. Now, obviously, you might be saying, surely the indicator itself knew something was wrong then. Surely the indicator was on top of that trade then. Surely what it is that we're looking at here is an ability to read behind. And that would be very easy for me to fake up an idea on that, wouldn't it? It'd be very easy for me to say, yeah, that's exactly what happened. Yeah, you definitely, that's exactly how this plays. It's all artificial intelligence and all the bunkum that comes from all of those sales pitches that you're now getting for everybody that's now cracked the artificial intelligence trade narrative, right? And that's obviously something that, a lot of people are going to play on. Everybody wants to now get into this artificial intelligence. They've seen it in the news. Now it's almost like Bitcoin, isn't it? As soon as you see everybody now wanting to sell artificial intelligence courses, you know what's going to happen, of course. It's now going to just take the absolute piss out of everybody at that stage. So you could obviously see this idea of the story. Now, what I want to highlight about this whole entire story is this. Look. So there's the news report coming out of Reuters right there, right? There's the news report. See the timing on the news report? 10:05. That was the original news report, 10:05. Our bid watch was at 9:40. So there's the difference, 25 minutes difference between those two pieces of information, 25 minutes difference. And then at the top edge, when we got that Reuters withdrawal of their storyline at 10:40, you can see the storyline again, look. So the Reuters story then evolved into this. So there's the storyline evolving at that point there, look, 10:40. Reuters has withdrawn the Saudi Arabia headline, right? Reuters has withdrawn the Saudi Arabian headline from 10:05. And obviously that was at 10:40. And we had our offer at 10:10 itself, 10:10, 30 minutes before Reuters withdrew the storyline. So when we hear these ideas, when we see these stories and we think about the idea that perhaps somebody somewhere is monetizing something, it suddenly starts to become maybe a little bit more suggestive that somebody somewhere is monetizing this, because if you have an idea of these stories getting put out, it's not a computer that puts these storylines out, is it? It's a human editor. There's somebody that's on the trade news desk putting stories out. Could it be a complete mistake? Of course it could. Could it be an absolute error where nobody benefited? Of course it could. Is it possible? Well, of course it's possible. Is it also possible that somebody was able to take 100% advantage of those two news stories coming out after positions were already taken? Well, somebody looking at our trade log would suggest that we already knew these stories were going to be possible, right? Somebody looking at our trade log, and they're the only two trades that we had, the offer watch at 10:10 and the bid watch at 9:40 were the only two trades we had on this period. And yet they were the bottom tick price and the top tick price, which is kind of crazy. But is it artificial intelligence? No. It's just the idea that somewhere across the market, sometimes these ideas become visible, these stories become visible before anybody trades them. Is it pure coincidence? Absolutely. Great chance that it is 100% pure coincidence. But could it be somebody monetizing it somewhere else? Well, of course it could be somebody monetizing it somewhere else, couldn't it? Of course it could be. Anybody that's been trading the stocks, I'm sure you all took advantage of the JP Morg's trade last week. We obviously had a JP Morg's upgrade a few days before earnings. Remember, that's one of our big stock picks is when we get an upgrade before earnings. I think I mentioned JP Morg's in the room before I left on holiday. That's a funny one. Before I left on holiday, I'm sure you remember we were talking about JP Morgan's earnings coming out, and that was after an upgrade was given in the upgrade report. So obviously that trade did pretty good. I think it was $10 odd on the JP Morgan stock, which was very, very nice indeed. Thank you very much. Not a bad return, actually, in terms of percentages as well for somebody as good as JP Morgan. But you'll remember we had an upgrade on JP Morg's a short while ago. You'll remember that from the tweets. And obviously, as you work through your tweets, you would have been able to see some of those upgrades. There's the JP Morgan upgrade there on the 7th. And what we suggested, remember, about these upgrades is very, very straightforward. If you want to find some really, really good stocks, and you want to try and get into those really good stocks at really good times, then it's very, very unusual, we suggested, it's very, very unusual for somebody to upgrade one of these stocks prior to an earnings report, right? So obviously when we got that upgrade, it's obviously on the 7th of July. It's just before the cash open on the 7th of July. And obviously the cash open on the 7th of July obviously we're getting ready to get some business done. So we're obviously ready for this bit of business, 7th of July. And obviously this is the JP Morgan trade here. So you can see JP Morgan's coming in here, 6. So there's the cash open on the 7th. You can see here, there's the 7th there, Friday the 7th. Okay, so this was before the cash open. There's your buy opportunity on Morgs. We know that earnings is coming out in a few days' time. So obviously we're paying around about 143.80 for that stock, 143.80. It's a buy and hold trade, of course, because of earnings. So we're paying 144, 143.80 for that stock, and you can see what happens. Obviously, we then get the earnings report right there on the 14th. The stock opened, actually during the pre-market, it was trading 155 a share. Pre-market, it was trading 155 after earnings. So we went from 144s to 155s for $11. If you held on until the cash open, of course, the best price you got was about 153s. It's still not a bad takeaway, is it? 144 to 153 for $9 a share. It was only in the market for 7 days, but what a lovely pickup right there, wasn't it? A lovely pickup on that trade. Whilst we're on this chart, you might also recall we were talking about the pricing of volatility. Remember that conversation we did on USO? We were talking about US oil, and it was a classroom that people were asking about how do we price up the volatility movement of any market, and we used the USO as one of the markets. So take a look at what happened to oil from that conversation. You might recall that we had oil on this chart here, and this was our classroom session here, remember? And we had this classroom session here where we had these commercial bid areas and offer areas. You might remember this. So these commercial bid areas and offer areas, and this is obviously as that chart developed. And obviously this bid ended up the bottom price. If you then take us into the remaining sessions that we saw since then, you can see what's happened to oil since then. Look, it's went from that $61 a barrel narrative to 69. Well, it's not really per barrel, it's per share, isn't it? Because it's a US oil fund. But you get the basic idea that it's the same basic idea here in terms of process. And you can see what happened in terms of measures. You can see it's almost the perfect measure. So there would have been probably no surprise about the sell coming in from that top line there on USO based on this high price, this low price, and based on the volatility bracket structure. They were obviously taught in classroom. There is very, very little to be left to the imagination. One would imagine if you simply just drew in the narratives and the elements that we obviously showed you in that classroom, because obviously this was a classroom we talked about in terms of these volatility moves. And obviously, if you look at that in terms of the volatility, you'll see that the bottom volatility was here, remember, 44.50, and the top volatility was here at 41.70. And as we drive that into the bottom edge, because it never trades there, you'll see where the high price was exactly $65. No surprise there then. So there's your value right there. And obviously, there's your measured move right there. Do you see how it works? You see how easy that works in terms of that classroom we did? So there's your measured move right there. Once the market broke north, remember we had that macro value improvement on oil as well of $5 odd to the upside, $4, $5 to the upside. So you can see when the market broke structure here, this was the market move, and it was a straightforward measure on the US oil contract as the price drove. And when you look at that in relation to how the dollar was pricing, do you see how the dollar and oil had a big influence? The dollar was starting to weaken right through that entire phase. And when we broke cover here, the main driver of that break on oil was the dollar getting murdered last week. So when the dollar got murdered last week, you can see exactly how the oil managed to drive higher through that entire week-long process there once we'd broken cover at this 65 wholesale price. And a beautiful buy-side rally from that narrative. Brilliant trade. Last week, of course, we also had the big inflation numbers out the US, and that's obviously one of the reasons why we saw equities having a nice buy-side reversal, buy-side play. Kind of weak numbers for the inflation metric. But again, if you were doing your work, I'm sure some bond traders, what did you get prior, what did you get prior to the US news? What did you get? Well, we all know what you got, don't we? You got a brilliant story on your inflation break-evens the day before the news, didn't you? So I'm sure in the room everybody was talking about it. I'm sure in the room everybody was highlighting what was going on prior to the inflation print coming out. Yeah. Did everybody highlight the linkers from the day before? Was everybody on top of the linkers from the day before? Were they very bullish from the day before? So let's take a look at it. Let's see what your view on the linkers would have been on the news itself. And you can see here from the day before the data, the linkers were very bullish bonds, suggesting and they were very bullish bonds, suggesting that the inflation print was going to come in weak last week. It was going to come in as a weak print. So we're already now looking at the inflation linkers and we're saying to ourselves, okay, this bond price is going to rock when the inflation print comes out. Equities, that's going to be bullish equities. Dollar, it's probably going to be weak for the dollar. Oil, it's going to be bullish oil in that case. Knowing all of those elements in that one single day allows us to make whatever decision we want. Buy side equities, buy side oil, buy side the S&P, buy side the NASDAQ, buy side bonds, buy side gold. And obviously the following day, of course, we see that this whole thing just kicks off massively, coming into the actual data itself, a massive rally. Of course, this isn't going to really give us much information regarding linkers until the day actually opens the next day. So a brilliant trade for anybody. That was a massive winning trade from last week. If you decided to join in with the linker brigade, if you decided to join in with that as a storyline, it was fabulous. In addition to that being fabulous, when I came back to my desk this morning, there was absolutely no question about what I should do this morning on bonds. Did anybody see the linker from last night? Last night being Friday, of course. Look at the amount of value we've got on the buy side. Is that not incredible? So this is the linker value from the prior day session on Friday. And as the linker value is suggesting that the inflation break-evens are in for a doing today, can we all agree that we got a lower low price into these edges? At the London Open, no less. London Open, look. Best time of the day to do any business. Unbelievable time to get involved in a bit of business. Monday, 17th of July, buy-side bonds, 134.11s, high price 135.14s. Unbelievable linker value, which was not offset by a weakness in the 2-year coming into today's session. So that was an unbelievable opportunity to go again into that long bond position, which absolutely nailed an absolute peach during the rally phase there on bonds. Now, I actually sold bonds into the second phase up here. We actually got a decent offer watch into the top edge on bonds, and I was able to get a little quick flip into the short sell, and we made another $1,000 on the way back down. So it's been an incredible day so far today. With the oil giving us this weird thing from Reuters, and then the bonds giving us a brilliant trade. The equities have been quiet, but they've still traded between the two key reference points that we gave you last night or gave you this morning in terms of the tweets. They're still trading between those two key reference points. Very, very straightforward, very quiet day on S&P just now so far, waiting for new drivers. But I quite like it. I like the storyline so far. I think the value looks still pretty good. We'll see what the oil price makes of the equity price. We'll see what the equity price makes of the oil price in 9 minutes when it opens. And we'll pick up the pieces this afternoon. Reeve, if they start a knob spread in the Asia Pacific, news does not change anything, will that be the